This is the Red Sea and the Gulf of Aden. It's become one of the latest conflict zones and one that traders should be taking notice of. It might not be on the scale of the Russian invasion, but it may have the potential to become a big disruptor of economic factors, particularly for Europe. And that's because it's one of the busiest shipping lanes in the world. If you're not familiar with the Red Sea, it leads up to the Suez Canal, and you may remember that's the place where that cargo ship got stuck a few years ago, which we'll discuss in a second. But that means it's one of the biggest risks for disruption in global trade. Well, a bigger risk would be a thermonuclear war, but we'll ignore that rabbit hole for just now. So going back to that evergreen ship that was stuck in the Suez for 6 days, that led to a queue of 369 ships carrying cargo worth $9.6 billion. So yeah, the Suez and the Red Sea are kind of a big deal for global trade. Now, between late November last year and early January this year, there have been over 20 separate attacks on shipping in that area, a mix of piracy and hijacking to UAV and missile strikes. Most of these have been against civilian ships that carry oil and goods, so this is the part where it could disrupt global trade. However, 2 of those attacks were also on the US Navy, with the British Navy also being involved in one of them. Now, targeting civilian ships is one thing, but targeting ships of the most powerful navies in the world is quite a bold move. And that's where things could escalate quite rapidly. Now, these aren't just random attacks. The reason behind them links back to October last year when Hamas launched a raid into Israel. Now, I'm sure you're already aware that raid resulted in hundreds of kidnappings, thousands of deaths, and so Israel took very strong action, declaring war and making Palestine a major conflict zone, quite a controversial one. But what links these things that we've just been discussing is Iran, a country that dislikes Israel very much. They back Hamas and Palestine, and they also back the Houthis, who are responsible for these attacks off the coast of Yemen. So while Iran may not get directly involved in a war, the military organizations that they back certainly are involved. And this whole situation has Western governments on edge as well, because keeping the flow of global trade moving is a key concern for them. So to the east of the Red Sea, we also have the Persian Gulf and the Strait of Hormuz. So Iran is on one side and the UAE is on the other, and this corridor is particularly important for the oil market, since major exporters are nearby. It's been estimated that over 20 million barrels of oil pass through there every day, roughly 20% of global consumption. Now, since the global economy relies on oil, that makes this shipping lane geopolitically important. It's in every nation's interest to keep it open, and Iran knows this. So this has made ships passing through that area a key target for Iran in the past. And a major disruption would likely happen if Iran decided to start attacking ships again. Then, as I mentioned, there's the Red Sea. Again, another major trade route that facilitates the transportation of oil from the Middle East and acts as a trade link between Asia, the Middle East and Europe. Now, it's estimated that 40% of trade between Europe and Asia and 12% of global trade passes through the Red Sea, including 30% of global container traffic. If the route is cut off, that can impact everything that relies on anything being imported, which is a lot of things. And this is exactly why the US, the UK and other major nations that are hundreds or thousands of miles away use their navies to patrol these waters, because the free flow of goods and commodities is so important to their economies. Bob McNally, an energy expert and former advisor in the Bush administration, said the oil market has become too complacent about risks that the Gaza conflict will expand regionally and threaten oil and gas infrastructure and shipping in the Red Sea and Gulf. He gave a 30% chance that there'll be disruption in regional energy flows as tit-for-tat attacks between the US and Iran increase, although a direct conflict remains unlikely at this time. And listen, this isn't like in the film Captain Phillips, where pirates roll in on wooden boats and somehow manage to climb aboard. One of the attacks involved Houthis flying in on a helicopter and seizing the ship. The attacks also involve drones and ballistic missiles, which means that actual Navy ships are the only thing that can realistically intercept them. A few extra armed guards on a ship isn't really going to do much at all. There is an alternative shipping route, but that's around Africa, so that means longer travel times, longer lead times and higher costs. And insurance costs to go through the Red Sea are already increasing by a significant amount. Major shippers like Maersk have warned that they won't use the Red Sea unless they can be protected. daily freight through the area is already dropping. Now, higher costs to energy and imported goods are not something that governments are really willing to tolerate right now. It seems like central banks have just managed to get inflation closer to being under control, and interest rates are already remaining relatively high. So a pickup in inflation again will pretty much ruin any expectations of multiple rate cuts this year, and that could negatively impact many markets, particularly equity markets like the S&P 500, as higher rates for longer or more rate hikes increase the risk of a recession. And we also can't ignore the fact that the US and the UK have elections coming up, and inflation is going to be a big factor for voters. And in fact, we've already seen missile strikes against Houthi targets, and I'd expect more to come if they don't back off. Now, it could also spiral further, likely in the form of more attacks on shipping and more intense attacks that naval ships will struggle to counter. It certainly is a risk, and so that means that we now need to consider the risk that we could have possible trade disruption returning and maybe more inflation.